How to invest in stock market on a tight budget. It is important to be smart when it comes to investing. And while many people like the idea of buying stocks, they don't want to spend a lot of money on financial advisors and trading commissions. Thankfully, you can invest in the stock market even if you're on a budget. Here are my tips for investing in stocks if you're not rich. Hi, welcome to Wealthy Mind with JK, where we'll be talking about topics about earning money and handling finances. We'll make videos for your watching pleasure 2 to 3 times per week. So make sure to comment, like, hit the subscribe button, and click on the notification bell to be updated in all of our latest videos. Number 1. Check your credit score. Your credit score is a good indicator of your ability to repay loans. It's also used by lenders to decide whether to lend you money and at what rate. The general range for a good credit score is in the 700s, with 850 being perfect. Your score may be lower if you have recently started building up your history, or if there was some sort of error in your report, like an unpaid bill or late payment that hasn't been removed yet. Number 2. Start with index funds. If you're new to investing, index funds are a great way to get started. They're low cost and easy to understand, and they've been shown to outperform actively managed mutual funds over time. There are 2 main types of investment strategies: passive and active. Passive investing involves buying shares in companies based on some kind of index, like the S&P 500, while active investors try to beat the market by picking individual stocks or bonds that they think will do better than average. With passive investing, you don't have much control over which companies your money is invested in. But since these funds track an overall index like the S&P 500, which includes 500 large US companies, their performance should be fairly consistent with that index over time. And because they're cheaper than actively managed mutual funds, this consistency comes at a lower cost. Number 3. Use a robo-advisor. A robo-advisor is an online investment service that manages your portfolio. They can help you invest in low-cost index funds, and they're available for a small fee. They're also easy to use. Simply connect with a robo-advisor through its website or app. Answer a few questions about your risk tolerance and goals, then let the service do the rest. This way, you can focus on the other things like making money instead of worrying about what stocks are doing today. Number 4. Open a share builder account. If you're looking for a way to invest in stocks on a budget, Share Builder is a great place to start. Share Builder is a robo-advisor that allows you to invest in a variety of index funds with as little as $5 per month. You can set up recurring deposits and automatic deposits so that money will be taken out of your bank each month and invested automatically, even if it's only $20 or $50 at first. You can also adjust how much risk you want by choosing whether or not to invest in inverse ETFs, which decrease in value when markets go down. Number 5. Use dollar cost averaging. Dollar cost averaging is a simple way to invest, and it's especially useful for those who are on a budget. Instead of trying to time the market by buying when stocks are down and selling they're up, dollar cost averaging means you invest regularly over time. This ensures that your portfolio stays balanced and reduces risk by spreading out investments over time. Even if one investment does poorly during any given period of time, this strategy also applies when buying individual stocks. Instead of investing all at once or waiting until you have enough money saved up before buying shares in one company stock, buy them regularly through monthly contributions or automatic deposits into an IRA account. This reduces risks because it prevents you from putting all of your eggs into one basket. Instead of betting everything on one company doing well financially, diversification allows investors' portfolio to benefit from growth across multiple companies simultaneously and helps keep them safe from downturns caused by any one firm going bankrupt or losing value dueling against competitors face to face. Investing in the stock market can be a great way to build wealth over time. It's important to note that investing doesn't have to be expensive, and there are many ways that you can get started on a budget. If you don't have much money to invest, think about starting with index fund or using dollar cost averaging instead of buying individual stocks. Both of these methods will help protect against losses if one stock goes down, while others go up, or vice versa. Which of these tips do you find interesting? Comment them down below. We love to hear your opinions on this. We hope that you've learned something about making money and finances. Don't forget to comment, like, hit the subscribe button, and click on the notification bell to be updated in all of our latest videos. See you on our next videos.